Hi everyone, in this video I'm going to do a brief earnings review for Carvana stock's third quarter results. Investors did not like what they saw from the used car retailer. The stock was down 15% as I'm doing this video after earnings were announced. So let's get right into it. Carvana, the main theme here is that they're slashing expenses to deal with slowing revenue growth. Overall, revenue decreased by 3% in the third quarter to 3.4 billion. The loss per share exploded to $2.67. That was up from 38 cents in the same time last year. Total gross profit per vehicle sold was $3,500. This was a decrease of $1,172. And so all across the board, bad news for Carvana stock investors. Of course, the company thrived during these last few years after the pandemic onset, where demand for used cars soared as the availability of new cars was diminished due to the chip shortage. Consumers who needed to buy a car said, all right, if we can't buy a new car, let's go get a used car. And so demand for used cars soared and put this market completely out of equilibrium. Used car prices were something like 40% higher than they were in 2019. Some people who bought a car in 2018, 2019 can now sell their used car with 30,000 miles on it for more than they paid for it when they bought it brand new. So these kinds of disruptions in the market, Carvana benefited from because it's selling these things, and so buying and selling it, it was earning a nice margin in between as customers were just rushing to get their hands on a car, and they're willing to pay these premium prices because they needed a car, they needed a way to get to work, and they needed a way to get from point A to point B. But now that demand is slowing down tremendously as interest rates are up along with higher prices, that's bringing revenue growth and customer demand incredibly down for Carvana, and so it's not good news. Industry-wide sales were down 12.5% in the third quarter, and Carvana was not spared from that slowdown. So to counter these macroeconomic headwinds against the business, against the industry, Carvana is slashing expenses and reducing inventory. In my opinion, these are prudent responses to the rapid slowdown in customer demand. I would have preferred for them to do this ahead of time, right? To kind of anticipate that this was going to happen eventually, that the used car market would not be in this kind of out of balance area for much longer. And so to have prepared for this ahead of time, I would have preferred if I was a Carvana stock investor. But the fact that they're doing it now is still okay. I'm glad that they're adjusting to this slowdown by slashing expenses and reducing inventory. But it doesn't seem like they've, reduced inventory all that much. If we look at the inventory as of September 30th of 2.6 billion was, down a little less than 20% from the 3.15 billion they had as of December 31, 2021. So it's down somewhat. I would have preferred to be down a little bit more, but let's see how they progress in this endeavor over the next 1 or 2 or 3 quarters before we really start to say the business model is broken and you should sell Carvana stock and just avoid it at all costs, right? It's a little bit too early to make that distinction that the business model is broken, right? So yes, they're not going to do as well as they did in the previous 2 years, but that doesn't mean that it's not a viable business model in the longer run. So that's a little too early to determine that the long run business model is broken. All right, so that's all I've got for this brief earnings update from Carvana stock. The stock is down 15% following the earnings announcement, and you can see why that's the case. Revenue falling, profit losses soaring, and that's not a balance that investors like to see. So if you've gained any value from this video, please go ahead and hit the like and subscribe button. It'll help me make more videos just like this one. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.